been talking about inflation now for quite a while, for the last 24 hours. We previewed, of course, the Bureau of Statistics releasing those numbers, and they did. So now we're at 20.12% for headline inflation for August. That comes down, of course, from 21.88 in July, and it is the fifth consecutive month now of decelerating inflation. Food inflation is at 21.87. You can see this is now month on month, and we do have to get into the month on month figures. 0.74% headline, that's your blue line there, and 1.65% for food. And you can see there's, food, of course, and headline inflation, coming together. There's been a bit of a gap, but we're going to discuss that right now with Dr. Patrick Ejumedia, who is the head of research at Sterling Asset Management Trustees. Dr. Ejumedia, it's good to see you. Thanks for joining. What do you make of the triggers? What are the triggers that have caused the inflation, this slowdown for over the past 5 months?
Yeah, I think, like you mentioned earlier, it's important to know that even though this is the fifth time inflation is dropping this year, this August inflation is about the largest drop, about 1.76 drop that it came down.
Yeah.
Look at it from since February, after the rebasing and all that. So basically, coming back to your question, two factors are the things that actually drove it down. And the two factors are what we've been talking about, food and the core inflation. And why did they come down? If you notice, you're almost getting to the peak of harvest, which is usually between September, October, November, peak of harvest. So that's, improvement in food supply, together with what the government is doing in terms of intervention, in terms of food supply and all that. Then again, for core inflation, for core inflation too, that also came down, is probably because of the stability in the exchange rate that we have seen. Don't forget that if you look at what happened to the exchange rate last year around this time and now, you see that huge appreciation and stability. So these are the factors that we think have pushed the numbers down. Okay,
so my follow-up would be, can it be maintained? Because, harvest is seasonal, right? So, looking ahead, can this deceleration be maintained?
Well, I still think yes. You know why? The reason is two reasons. One is because in the short run, we've had a base year inflation. We had inflation about 32% last year.
Right.
And I can tell you, inflation can never get to that high again. So in the short run, we'll see inflation coming down, so we'll see it maintaining. But in the long term, what we need to do is to improve supply for us to be able to maintain it going downwards continuously. We need to see food supply continue to go upward. We need to see that moderation in energy prices and, of course, stability in exchange rate.
Okay, so, yes. Excellent. I'm glad you mentioned food, because I do want us to spend a good amount of time talking about food. There's a lot of talk around, okay, if inflation is decelerating, why are Nigerians not seeing it when they go and buy food, right? So why is it not being reflected in price? Or help us out. Is it a misunderstanding of what inflation measures?
I think it's a misunderstanding.
Yeah.
Because I've got to a lot of time people keep asking that question. As economists, come and explain to us. I think what people think is that inflation numbers have come and the numbers have gone down.
Right.
And I went to the market yesterday and the prices are still high. What are you telling me? Right. I don't understand.
Exactly.
But the issue here is that what we are saying is that even though the inflation has come down, if you go to the market, prices will still be going up.
Right.
But it is the pace at which prices are going up that are now coming down. So if you went to the market last year and you bought something for, say, let's say 100 naira, and you're coming to the market now, you are seeing it, instead of seeing it for maybe double the price for 200, you're seeing it at 120. So you are not saying prices are just dropping the way people expect. So that's the misconception there.
Gotcha. Now, I do want to focus on food inflation. I want us to put our charts back up. So on the year-on-year, we've gone from, and I'll start from rebasing, and thank you for reminding our viewers. So if anyone looking at this chart, it's from January that the inflation figures were rebased. So food inflation, that is your orange line, was at 26.08 for January. This is year on year. Down, slowed to 21.87. But if we put up our month on month, if we move to the month on month chart, Dr. Ejumedia, you'll see that I'm starting from February, and there's a gap there because we didn't get the month-on-month numbers from the Bureau of Statistics for January, and that could be because of the whole rebasing timeline ahead. So 1.67 in February, you see the spike there in March, and then but still back at 1.65 for August. And the governor of the central bank, Governor Olaimi Cardoso, he mentioned month-on-month inflation when he was talking about how the central bank is considering rates, and it seems a bit sticky. What's your take, I guess, on the month-on-month side for food inflation?
Yeah, if you just pick the value in February or January and look at the value now, you will see it's sticky because 1.7, 1.67 and 1.65. Yeah. But if you look in between the numbers, you will then see that at some point inflation month on month got to about 3%.
Right.
So for it to get to 3% and now come down back to the number that it is now, you see that significant drop. But it's still sticky, like you said, and a lot of factors we all know are the things that are driving it. Some of them include insecurities that we mentioned, flooding and all that, then logistic costs and all of those things. Then market behavior is very key. Some market people feel that, we sold this thing for this amount last year, and we cannot go down, our price cannot go down. So that market behavior is still there, a key factor too that is playing the role there.
Speaking of which, and I really want to focus on food, because a lot of people, this is where President Tinubu has declared a food emergency in the country. That was, I think, 2023 or so. And he's again calling for prices to come down. But food producers have replied and said, hey, for food prices to come down, the factors of production that are involved need to come down. Yeah, so what's the solution here?
I think there's a misconception too, again, with what the farmers are seeing and what the presidency is saying. The president is saying that, we want to reduce food prices. And they are saying that they want to do that via supplying it to the market. They didn't say we want to go and cut your cost of production. Right. So via supplying of the market, and maybe they'll be talking about their CNG that they spoke about earlier enough, looking at method they can use to reduce the cost. If you listen to the speech, they were saying that the cost of transporting these things are high. So they might be looking at how to cut that cost, not the cost of production, even though they later then mentioned it in their conversation. So the major thing here is that gap between what the presidency is saying and what the farmers are saying. So it's one thing for you to know that one is to say that, yes, we want to increase supply of food in the market. It's another thing for you to be saying that, we are not going to cut down our price because we know that already in harvest period, and harvest period supply will naturally come up. How does this food then get to the people? Right. I think in that part that the government is trying to look at for.
Gotcha. Let me take it back to investments this time now. Talk about the real rate of return. So we have MPR, the monetary policy rate at 27.5. We've got inflation at 20.12. So I guess a positive real rate of return. What's your take on the positive rate of return? I guess what it means for fixed income money market. You guys cover this at Sterling Asset Management, right? So talk to our viewers about this. Is this
it's good, if you look at where we are coming from, given the fact that at some point we had inflation number that is higher than the MPR rate.
Exactly.
But that's not what investors look at for. Investors look at for the yield. Right. So what's the yield giving? So it's not just saying that, yes, it is positive, because the MPR is just a rate, it's just a paper document. So investors don't look out for that. They look out for the yield in terms of the yield in T-bills and the yield in bond. What are they giving? So it is when those begin to exceed inflation, that's when I say the effective real rate of return.
Okay, I see. And I just want to follow up on that, because we're expecting a rate cut tomorrow with the US, right? With everything that's going on there. And I'm thinking that if the rates start to come down in the US, is it possible that investors want to look elsewhere for returns and could look at in Nigeria? And then, so I'm really getting to the MPC and what you think they will do with the next meeting, because it seems like they are still cautious.
I still don't think that, I don't know, well, maybe a lot of sentiment are going to come into these issues. For me as an economist, if I begin to look at the numbers, yes, if you look at what is happening to the US, you saw the inflation number that came out, and you saw that it went up to 2.9.
Right.
You see their exchange rate, you see they're having issues with their exchange rate. Yes, they're having issues with their growth, they're having issues with their unemployment data, but they have to then look at, it's a very dicey period for them now. They have to be thinking, should we reduce unemployment and grow the economy or tame inflation?
Right.
So it's going to be very dicey. So for us to just immediately say that they are going to cut rate, I still feel no.
Okay,
it's going to be a tough decision.
So you're right. Thank you for making that point. That is actually a very, even the markets in the US have assumed that there's just going to be a cut.
No, it's not going to be that easy.
It's
going to be a very tough discussion that we're going to be having there.
Okay, so So my thing is, bringing that home to Nigeria now, what do you think our MPC could possibly do for...
the next meeting is coming up sometime next week.
That's right.
Yeah, so for me, again, I don't think that we are also going to be cutting rate as well now.
Yeah.
Maybe sometime early next year, maybe their first meeting for next year. The reason is because we've targeted 15% as inflation for this year. We are still at 20%. It's still high.
Yeah.
We've seen exchange rate, even though it's stable, there's still very strong pointer that if we don't curb it very well, it might have some issues.
Yeah.
So, and I'm sure that the government will want to do all it can to stabilize the exchange rate and to bring inflation down to their numbers, that they forecasted. Don't forget, we also look at system liquidity in terms of the banking system liquidity.
Yeah.
This has been positive for most times, which shows that there is a lot of money too around that the bank, the CBN will want to cover out of the system. So these are issues that I also think they will be considering too in their meeting
when
to
they
make
get
their
together.
decision.
Good stuff. Real quick, what's your outlook for inflation before we go? How do you see things as we get into the final round of the year?
Basically, government has forecasted 15%. I know that we are entering into the peak of harvest, and I'm going to see, just like we see that huge drop of inflation about 1.76 in August, we are likely to see another huge drop by when the data comes out. So that's for this month. So maybe we'll be closing the year around 17-18%, but not necessarily 15%.
Right.
We'll close very close to it.
Dr. Patrick Ejumedia, the head of research, Sterling Asset Management and Trustees Limited. Thank you so much for your time. Really appreciate you calling.
Yeah, it's always good to be here.